Hey everybody, before we dive into today's episode of the AgView Pitch, I want to invite you to check out our exclusive podcast, 19 Minutes. For just $30 a month, you'll have access to high-level business insights and new episodes that are released on the 9th, the 19th, and the 29th of each month. Topics include finance, cost of production, team health, taxes, collaboration, and much more. With 77 episodes already available, signing up gives you immediate access to all past and future content. Click on the link in the show notes and subscribe and start boosting your bottom line today. Welcome, everybody, to another episode of the AgView Pitch, heading into a new marketing week, April 28th through May 2nd. And so it is already May going into this week, so it's amazing how time flies. We have with us today Jeff Fichtelman. Jeff, how's it going today?
Going well. Thank you for having me on again.
Good. We always love having you on. You're in the East. And so a lot of our contributors are kind of central or even more west. And so we like to get the Ohio word in and kind of see what's going on in your guys' neck of the woods. And I guess I'll start with you. I was going to give you my 2 cents on our world, but let's get a take on kind of planning progress in your neck of the woods and kind of what's going on in your world.
Yeah, so we did a survey with our farmers Monday of I guess the past week. So when everybody's listening to it, it was the 24th. We sent it out. And you're right, we are predominantly Indiana, Ohio, Michigan, and Kentucky. So the eastern kind of third of the grain belt. And almost universally at that point on Monday of the week, everybody was ready to go, but had not planted much. I would say maybe 20% of our farmers had done something the previous week. So coming into the week, I guess, prior to people listening to this, everybody's expecting to do a lot. Now that we're recording this at the end of the week, I could confirm there's definitely been a lot of activity. It feels like on average, I love poking around with guys, see how they're at. It seems like they've gotten maybe 20% of the beans in, maybe 10% of the corn in. Feel like it went in good conditions, are welcoming a little bit of rain that's in the forecast today and tomorrow. And honestly feel pretty optimistic about things. There was maybe a tiny little window of a few days where people started to get concerned when it was really wet about a week and a half, 2 weeks ago, especially down in Kentucky. But bring out the sun and some hot temperatures. And yeah, and I think that's probably the biggest story for me is I think the market was really wanting delayed planning. It's like we really want that bullish story and the fact that the planning pace came out actually slightly above pace, reminded the market just how quick guys are at planting this crop. It's hard to sustain bull markets on delay planting, especially when that delay is putting moisture into generally dry areas, kind of curing that a little bit. So I don't know. It's been generally quiet as guys are working on the equipment, trying to get ready, and obviously on those good days, really trying to ramp up and go. And honestly, I think a lot of them, they said, even if they had a clear week next week, it's been interesting to hear the universal trend of all farmers is they want to spread out the eggs over multiple weeks. They don't want to plan everything in a 1 or 2 week window. If the weather's good, they want to kind of spread out a little bit. Maybe they've been burned a time or two in the past by focusing all the planting in a 10-day window. So
Yeah, I think, yeah, one of the things I think a lot of guys will do agronomically, if it is look like you got a window to throw a lot in all at once, I think on the corn side anyway, is you plant the early hybrids first and the later hybrids later. That really spreads out that pollination time frame for sure. Yeah, I think it's interesting you say kind of where you guys are at. Kind of our observation is, we're in East Central Iowa, so kind of right in the eastern part, kind of right in the middle of the state, kind of between that Waterloo and Cedar Rapids area for those who don't exactly know where we're at. And we got a lot done the week before, so I think it was that week. What was it? This last week was the 21st through the 25th. It was the week before that because it started raining on Easter here, And we have not, I think we had an inch and a half of rain on Easter. Some of the areas around us got as much as three. And then we've had at least a 3/10 of an inch of rain every single day since then. So we have not had a drying spell. We've had some sun and warmth, but then we get another 3/10 or a half an inch in the morning. Then the sun comes out, and then the next morning we get another 3/10. So I think we're pushing a little over 3 inches in total since Easter, and are pretty wet right now. But we were ideal, I would say. In our own family operation, we got the beans done that first week. We completed the beans and got about 20% of the corn in. I would say Eastern Iowa and Iowa as a whole is probably in that 50 to 60% done with soybeans, and probably that 20-25% done with corn. But a lot of that was done, that second week of April time frame, as opposed to the third week. And then, we'll see next week. There's rain in the forecast even this coming week, where, people will be listening to this. I know there's chances of rain Monday, Tuesday as well. So it might be, the second week of May before we get back in and do very much. That happened to us last year, and we still had pretty good crops though. So, so we'll see. I mean, it's like you said, getting the planting dates spread out is probably not the end of the world. And I think the biggest thing is having the beans in early. It seems like, if you can get the beans done before May and almost the whole entire corn belt, corn, you can stretch that out a little longer, and it seems like you don't get the penalty you do with soybeans.
I'm curious from your perspective. I feel like the thesis of the bulls right now is all of the weather guys are talking about likely hot, dry out west this summer. And you pair that with an already existing drought monitor that's showing that you guys predominantly are in drought territory. Obviously, it sounds like you've gotten a lot of rain spread out. Do you have any concerns about today? Do you feel like you're in a drought, like from a doesn't sound like it. And then I guess what's your take on some of these weather forecasts? I know it's early, but is that a concern at all being out west?
Yeah, I really struggle with the weather forecasts, in all honesty, too, just because it seems like they're
Yeah.
lucky if they can get 3-4 hours right, in the spring and fall in particular. They're long range in the summer. I mean, theoretically, if it gets hot and dry, there'll be some penalty. I mean, our subsoil is not completely recharged. It's nicer to charge it in the fall and in the winter, though, than it is when you're trying to plant. And we'd rather have it be bone dry when you're planting if you can, just so you don't screw the soil up. I mean, because it'll be, what happens for a lot of these guys, you get these rains and it's 4 or 5 days of dry weather. And if there's rain in the forecast 3 days, 4 days out, you probably better not go do anything. And, I mean, soil conditions are still number one as far as getting stuff in. So it'll be interesting. I mean, it's spotty. I mean, you don't have to go too far, and guys are rolling too. I mean, in Iowa as well. So everybody's gets to take their own turn for sure on the on the weather. So, but I don't think, this, if we get hot and dry in the, it'll be a weather market, because, you mentioned before we started, and I'll ask it as a question, is there anything in the market that represents a weather threat in terms of price currently, in your opinion?
Question. I would say at 450 versus D's corn. And part of that question, I feel like, has the assumption that we've elevated to a new price paradigm. In other words, 2 billion bushels of a carryout in corn now means 425 to 440, whereas 2 billion bushels back in the 20 teens meant 375 to $4. So it does feel like the way the market's trading, especially during August of 24, where it felt like the most bearish sentiment, the perfect storm of all the old crop selling pressure, uh, paired with the market's assumption of carryout being well over 2 billion. Now, in hindsight, it was really closer to 1.5 on old crop now. But in any case, we went below $4 for all of maybe 4 or 5 days and then bounced right back up, proving that it is tough to sustain sub $4 corn. And I know a lot of guys debate whether or not cost of production matters in the eyes of the market. Yes and no. I think you can't sustain below cost of production for more than a crop year, because at some point you're going to reduce supply. Talking to some folks who work with farmers down in Brazil, their cost structure is not much more favorable. I mean, the value of equipment is relevant or risen quite a bit down there as well. The value of land has gone up quite a bit, I guess, over the last 4 or 5 years, a really good margin. Farmers down there are able to buy new land and write 100% of the cost of the land off in that year of taxes. So a lot of guys took those earnings and bought land, which of course, when you have that many people trying to do the same strategy, it inflates the price of land as well. So I think it's tough to sustain low fours or even high threes. So based on that assumption that 450 is kind of a 1.92 billion bushel carryout, right now that's 180 corn. So no, I don't think there's any weather risk premium at 450. I think the USDA will tell us we can grow a 182 crop on 95 million acres. I think that's highly debatable. But at the same time, I'm losing a little bit of confidence that will be sub 176. It feels like things are generally going in on time and in relatively decent conditions. Moisture is kind of landing in areas. I mean, as you rightly pointed out, Chris, no, there's no perfect setup, but there's also no terrible setup either. So if we end up at say a 178 type yield, we got 1.8 carry out, and corn is maybe 460 to 490 if we're lucky. And maybe the best thing I feel like from an optimistic point of view is from Liberation Day, if we want to call it that, at, what was that, April 2nd, till now, we have seen pretty well sustained corn demand at the export market ever since that point. And one can argue maybe some countries are front running tariffs, but it doesn't seem to be the case because we have seen also very little, other than China, of course, retaliatory tariffs against the US. Everybody's been very quiet. Now it seems like Trump's kind of pulling back a little bit on the extreme tariff story. So I feel like if we can, the biggest bear story was a crushing of demand. If demand stays relatively robust, we can afford a bigger yield and just maintain these prices. But we're unfortunately at a stage now where we need a true weather problem to get us north of $5 and sustain there. And those are tough markets for farmers to sell grain into because if it happens to be a problem in your backyard, a lot of guys freeze up during that. So
that intensifies the increase in price too, because there's
it
not any
does.
selling. So
Yeah.
it just enhances where it's going. Let me ask, I want a little bit more on acres, and then I want to shift over to old crop for a minute. But on the acre pace in your neck of the woods, are you still, you mentioned 95. I mean, when I look at our numbers and I look at the shift that we've seen, I mean, on Profit Manager, I wouldn't be shocked to see a 96 actual planted acres. What are you seeing in the eastern half? Are people shifting to more corn? And if they're in the field and can stay in the field, guys are planting beans first. And so that kind of, when people used to say, well, they keep planting corn, well, everybody's planting, not everybody, but a lot of people are planting beans first. So did they get nervous and switch back to corn and then end up with more corn acres, or did they stay on beans? And, what are you seeing in your world?
Yeah, I mean, I would say definitively we're not we're not seeing more bean acres. We are seeing more corn. It's not like dramatic, and I'll put it that way. But what I've noticed and kind of reading the psychology of what acres to plant, it usually boils down to this. Farmers, and you and I have talked about this, the majority of them don't know their true cost of production, but they have a gut instinct. And I've noticed for the guys that we get to work with that don't know the down to the detail of what it costs to plant corn and beans, they have an instinct that says, I can't make 1030 beans work, but I feel like I can at least try to make 450 corn work with a little bit better yields. There's been some optimistic memories of corn yield over the last 2 or 3 years and some pessimistic memory of bean yields. And then you throw the last really important feature, which is what is current corn price, even though it's irrelevant, what's spot old crop, and it's 490, and spot old crop beans again around 1030, 1040. So they feel like, hey, there's hope that we'll see a 490 to $5 corn price, which almost every farmer feels like they know they can make money at. So generally speaking, there's a lot of pessimism around beans, and rightfully so. I think the equipment costs that have been accumulated over the last 5 years, um, the land rents that we're seeing. I worked with a farmer recently, and there was, I think, about 600 acres that came up, generally in his backyard. Of course, it was a silent bid, so he and I debated quite a bit of like what is the right number to put out there. And we went deep in the details. You'd be proud of me, Chris, deep in the details of the math and of like, what is the max you should bid? And it came back at like $230 an acre was the absolute most because based on this ground, he'd be lucky to get better than 190 and maybe 180 is expected. Well, he learned that that land went for 310. And there's like just no way that farmer's making money. But I think most guys just don't do the math. So the costs have inflated so much. Guys know you can't make money of beans on 60 bushel yields at $10 cash, which
Mhm.
is kind of generally average in my neck of the woods. That's $600 an acre. That's not covering it. So we're struggling to see more bean acres. To your point, the guys who could plant early, it's I agree with you. We could see 96. Maybe it produces a long-term bull story in beans because obviously beans shrink another million or million and a half acres.
Mhm.
I mean, at some point, the market will wake up to that, but not right now.
The beans really need the weather market,
Yeah.
and in anticipation in the summertime of, that they got hurt by yield. But, if everybody's getting the beans in early, that intensifies the potential for a good yield too. So it's going to be interesting. There's a lot to be told to this story yet for sure. So
Yeah.
I want to hit on old crop for a minute. The reason I'm all dusty looking, I actually blew myself off, and I was looking. I'm like my hair was like completely white because I've been in a grain bin all morning, behind a sweep, cleaning out bins. We have everything priced. We just don't have quite everything hauled yet. As I talk to our clients, there isn't very much corn left, at least in our client base, like very little of the 24 crop. Is there more than 20% of old crop left to market, do you think? Or is that about where we're at or less? Because it feels to me like there isn't very much old crop left other than maybe the elevators sitting on some from some of the operations, like you said, that maybe are sitting on cash and they aren't thinking about it, or they're hopeful that they're going to see some kind of a weather market or something. And, is there, does that bode well, or what's your thoughts on old crop? Because basis has really been good. I mean, we had mostly HTAs, and we've just been taking advantage of the basis when it shows up, and when guys are planting, that's the time to haul and the time to sell. So get your comments on that.
Yeah, definitely less than 20. I would even say less than 10%. Most guys were cleaned out completely before planting or down to the proverbial gambling stock. So, I mean, pick your number, 5 to 15%,
Yeah.
and are now actively trying to find markets during this planting window for rainy days. So, yeah, we got a lot of guys who are shopping around May values because it's great. I mean, in a sense, it's we can all be a little bit thankful the timing of the rally. I mean, the original run up to 510 or 520, depending on which futures month you look at, May or July, happened during that late Jan February window. I mean,
Mhm.
you couldn't have asked for a better setup because that's when guys tend to move old crop and the establishment of the Feb average for crop insurance. So it allowed better than expected cash flow and a better than expected Feb average from an insurance perspective. So that's really good. But it created an environment where it just sucked almost all the corn out. And then you throw in the memory of holding corn until the summer of the previous crop being absolutely the worst decision. Yeah, it's kind of the perfect storm, which is interesting because there is so little corn left, and we actually do have a legitimately tight carryout. As I mentioned, export demands continuing to chug along at a better than expected pace. Like we're exceeding the current pace from the USDA export number, and they just increased it uh, this month in April. So it wouldn't shock me to see another 100 million off old crop carry out for corn, which only helps elevate the floor for new crop. I think we're just creating an environment where knock on wood, we should not see new crop sub 425, 430. But at the same time, because there's so many acres, to your point, and it worries me the dichotomy a little bit because we have very little old crop left, but very little new crop sold. Most guys don't start focusing on new crop until at the earliest harvest of 24. And from that point till now, uh, we've only seen just about 3 days near 490. Most of the time we've spent in this kind of 440 to 460 range. And guys just aren't excited. And we've asked some grain companies out here out east, kind of what does your new crop book look like? And it's exceptionally low in terms of actual sales. But we've had four companies tell us they have a record number of offers for new crop corn, mostly 480, 490, but there are some 470s. And we stopped literally at 469 and a quarter a few days ago or
Yeah.
a week ago. Um, yeah, everybody is amped up needing. It's funny because we all want the weather market so we can sell it, but either we're never getting the weather market or the weather market's going to come with such a punch that we're going to suddenly freeze up and not sell it. Like this game's
That's
not that easy.
that's why you
So
put the offers in and then leave
I
them
know.
there, and
Yeah.
don't remove them. That's I think we did a 19 minutes on that topic,
Yeah. Yes.
taking them
True.
off. And I think that's really, I think, for two reasons. Number one, it's when you're busy as heck. You know, Number two, it usually is just a minute or two. A lot of times it's nighttime trade or something that gives you that opportunity. So you kind of need to have those working. I guess what the other thing I was curious of, and I'm going to hit you up on wheat, so you can be thinking about that for a second too here in a minute. But um, tariffs, geopolitical stuff, just the volatility potential. I mean, it seems like China has, there's some communication going on and stuff there now. Um, Soybeans, corn impacts anything you're watching on any of the crops that are like, guys, watch this in the next week or two, pay attention to what things are you guys watching?
Yeah. I mean, I definitely think the market reacts far less today to the same news stories of the ups and downs of the tariff rates. It also feels like Trump is absolutely trending towards less, not more, in terms of tariffs and retaliation. I think he realized uh, that very universal support over the idea of punishing China and the need for raising more funds internally, but how it was approached in the extreme moves right away, it may have created a bit of a backlash from the world countries. Now, the good news from a grain market perspective is right after Liberation Day, there was wide assumption for the next 7 days that you would see one after another of retaliatory tariffs on us, and all of them targeting the grain industry and really U.S. commodities because that's our main export. We
Hmm.
don't have a lot of exports out of the U.S. because we import so much. So these other countries getting back at Trump, it was an easy target to come at us. China did retaliate, but specifically, they did not include corn or beans in there. Now they have slowed down their bean purchases, but they did not say, hey, new tariffs on beans or import ban, which they did on some of the other like poultry and some other smaller commodities. So I would say the lack of storylines on retaliation was generally a good thing. And with Trump pulling back, maybe he's realizing there's other approaches to achieve what he's trying to do here. Um, so yeah, generally speaking, and I kind of related a lot to the Ukraine-Russian war. When Russia first bombed Ukraine, the market ripped almost $2. Everyone assumed there's no way we're going to plant anything in Ukraine, put a zero on production. It's a whole new world. Russia's off the map. By the 12th time they bombed Ukraine, the market moved like a nickel and then kind of faded by the end of the day. The
Hmm.
market's just, once they've seen the same story over and over, they just kind of move on. They shake it off. And I feel like that's where we're at now
Hmm.
from tariffs, uh, where it's going to be hard to really shock the market anymore. I feel like it's reasonably business as usual with a small, subtle hurt to our export countries. I mean, everybody feels probably a little burned at this moment, right or wrong, and maybe it's well deserved. This in a political statement, but um, it's just enough that if we're the equal competitiveness to Brazil and Argentina, I think we lose a business. Now, the good news is the drop in the US dollar and Brazil's not oblivious. So the minute tariff day happened on April 2nd, their cash price skyrocketed because they knew, hey, we're the only shop in town everybody likes, and the price is immediately offset. So, I mean, we are the most competitive right now. So I'm optimistic that we're not going to lose the export business. It just maybe isn't going to be as wildly robust, but we don't need it to be like record setting. We just need to make sure we don't lose big
Mhm.
business, I would say.
Yeah, I like your comment on the news feeds or the headlines in particular not moving the market so much right now, and almost makes me wonder how much they've recalibrated the algorithms a little bit too, because it seems like, it's the algorithms a lot of times that move stuff based on instantaneous information and instantaneous moves. It's almost like there's been this, all right, guys, let's recalibrate the sensitivity of certain keywords, certain things, so we aren't getting that huge volatility and those spikes and stuff in there. I don't know if I'm wearing a tinfoil hat on that one or not, but it just looks to me like, okay, they're, because it's always the computers that are trading way faster than any human can anyway, and it just feels like there's been some recalibrating done
To
there.
support your view on that, we talked to a couple big hedge fund guys pretty regularly, and we talked to them this week, and they're completely focused on weather right now.
Yeah.
They know that everything is kind of behind us, and now we're almost right at the midpoint in their view. I'd slightly disagree, but they think that 460 is the fair price to just wait and see what weather is going to be. And if weather turns out to be ideal, we drop to 430, 420. And if weather is a problem, we jump to $5. So today, there's no need to go to $5 without that known weather problem. And there's also no need to go to 420. So they're just in a wait and see. And you're kind of seeing that a little bit with the fund position, although they did add somewhat of a surprising amount of length recently. I guess one or two big funds probably wanted to, they saw all the weather reports from the weather guys, who I agree with you have a hard time knowing 4 hours, let alone 4 months from now. But
Mm.
they were probably trying to front run it a little bit. But largely speaking, I think a lot of the big spec traders are focused on weather, which, it's kind of what we wanted.
Yeah.
Get back to what we all know. But yeah,
That's interesting. So then, if they're looking at the funds or looking at a range based on weather and they see 460 as a kind of that median comfortable zone, where, in your opinion, where do you think they would see soybeans and wheat relative to
yeah.
corn being at 460? Where do they,
They,
any
they,
feedback on that?
One thing I noticed with beans especially is there's a huge spread between what they have plugged in for the export numbers. So talking to the various different funds, some of them are showing a 300 to 400 million bushel drop in exports for the 25-26 crop. They're the most bearish, and they're looking at 8.75 to $9 beans, and they're the hyper bears. And then other folks who are saying that most will lose is 50 or 100, and with reduced acres, they're looking at 11 to 11.25 beans. But it feels like with corn, there's actually pretty strong agreement between all these big shops on corn. Corn demand's pretty resilient. It's all about supply and really specifically all about yield. Beans, it's all over the place in terms of views. And I guess logically speaking, 1030 probably is a similar midpoint. All of these big funds are very well aware that's below cost of production. They know they're losing acres, but of course, generally speaking, the market thinks we have to lose bean acres, which we probably do with what's going on. Um, so I think if demand comes in more resilient, I think the huge win right now, as Trump's kind of getting back on a little bit more positive footing with China, in other words, not going from 20% to 150% tariffs, seems like they're coming back down,
Mm-hmm.
is if he could convince China to make a goodwill gesture purchase of U.S. soybeans. Like that would be a big move forward because nobody in the market's expecting that right now.
Hmm.
And a lot of people are assuming not only are they not going to do that, but China bought about 800 million US beans in the last 12 months. I mean, if they go to zero, that's painful. They bought almost no corn, so you can't go from zero below zero. It's just they're not buying corn. But in beans, they do have a lever they could pull at. And now, granted, other countries would fill that gap a little bit. We're not seeing a carryout go up 800 million, but it's not going to be one for one. So
Hmm.
China has a little bit of a lever on the bean market, and that's what has people spooked.
Yeah, they're pretty smart buyers too. So they're I guarantee you they're watching you talk about the weather market and everything. I mean, they have experts watching this stuff too. I mean, they're not dumb. They're gonna take
Yeah.
advantage of price opportunity to load if they need to. I want to wrap up. Any comments on wheat? You're in the part of the world where
Yeah.
I'm in the part of the world in Iowa. I think there was maybe 10 acres planted of wheat last year or something. But we do have people in the Dakotas and east and out west and stuff. Any comments as we wrap
Yeah.
up on wheat that people need to pay attention to and those guys as they uh, getting into the growing season for those guys?
Try to ignore it 'cause it's so unpleasant talking
I
wheat.
know it. I know. So
But
in
no, I
other
mean,
words, well, thank you. It was good talking tonight. We'll see you guys later.
yeah. The one thing I would say with wheat is generally speaking, we are underpriced versus where carryout says we should be. Funds are heavily short. Like there is the makings of markets should go back up to mid sixes. However, there is a universal small amount sold, and the tendency of farmers is during wheat harvest we sell. We
Mm.
rarely store wheat. We pretty rarely sell ahead of wheat harvest unless we get great values. Um, so the market knows, the funds know, the big guys who are leaning on the short side right now, that they got the free exit June and July because everybody has to sell. So when the farmer sells, they buy it in. So it's tough to get a rally from here through June without a sudden shocking weather development, which doesn't feel like we're seeing today. Most of the farmers we talk to are not like feeling the most amazing they've ever felt, but they feel pretty good, is the most common response I get about the wheat crop. It's early, but still, generally speaking, they felt like there's enough snow cover. There was no major frost issues. Things look pretty green at the moment, pretty level. I mean, from what I've heard, is everybody feels pretty decent about the wheat crop, and it's been a challenge, similar to corn and beans. There's just been no opportunity to sell obvious values, which means the majority of farmers are undersold and will have to sell. That's the problem with wheat right now. If you find yourself in the camp where you're going to be in the I got to sell June and July,
Yeah.
either you close your eyes and join everyone else, or you have to realign even modest rallies to 580, 590, because today most guys won't touch it unless there's a six, which means it's hard to get the market up to six
Hmm.
pre-harvest.
Yeah.
So
Yeah. It's not a fun topic to talk about. It's kind of like talking about cotton or soybeans.
no,
Cotton, soybeans, and wheat are not fun topics
no,
right now. And not that corn is, but corn basically took acres from um, all those other acres on those three crops. From what we can see in Profit Manager in particular, anyway, we saw a lot of cotton shift to corn. We saw a lot of wheat shift to corn. We saw a lot of soybean acres shift to corn. So that's why I'm leaning toward the 96 plus million acres.
yeah,
But we'll see. I was wrong
agree.
one time, so I can easily be wrong again. So I'm gonna give you the last word. What do you want to leave the guys with going into the last week of April and the first couple days of May? What do you want to leave guys with?
I would say if you're in the camp that you always sell during or during planting season, and you got nothing sold, close your eyes and sell 10 or 20% here at the market, 450 to 460, and hope to God that's the worst sale, because I do think we are in a paradigm where if weather sustains at good levels and farmers never get to that selling point, we could repeat a late season kind of deep selling pressure. So I just always say you want to be first in line, not last. I'm not recommending guys go crazy and get 50 or 60% at cost of production or less. I just say if you're at zero, move off the zero line and establish that first sale. And I always say it's easier to work. It's all about shifting your mindset. If you're just always saying, hey, where's the price I want? If you're say, my first sale's at 455 and my next sale's at 475, that's a win. I'm selling 20 cents better. And it just helps kind of change the perception a little bit. But you got to get off the zero line if you find yourself there. And if you're at 20 or 30%, you can afford to be a little patient with good insurance. So,
yeah, that's a key thing too. And a lot of operations have really good insurance coverage. And to your point, getting something done makes it easier if it goes up. The hard part is if it goes down from wherever that first sale is, you hope is the worst one. That's where it
I know
too. So it's a hurdle. If this was easy, everybody'd be doing it for sure. So
true.
with that said, hey Jeff, if people want to get a hold of you, want to ask you some specific questions or whatever, what's the best way to reach you if they want to catch you one-on-one?
Yeah, Jeff at interactiveag.com is my best email, or just go interactiveag.com is a good email or website for us. You just do contact us form, but yeah, either way, I appreciate the opportunity as always, Chris.
Yeah, thank you. Well, it was really a good conversation as usual. We'll get you back again once guys theoretically get stuff wrapped up and get done planting. With that said, really appreciate it. Thanks, Jeff.
All right, take care.
Yep, you bet. Thanks everybody again for listening, and be safe out there as you're trying to get the crops in, get some sleep, stay rested, be safe. With that said, thanks a lot. We'll catch you next time on the Ag Pitch.